4:02, so I think we can get started. I'll call the meeting to order. I'm going to introduce some others here. First, Kurt Schoenauer and Alan Dimbers are in the back of the room, and I think those are kind of our only non-employee, non-board member shareholders. Michelle is the secretary of the corporation, and she's going to act as secretary of this meeting. And then we have ERIK LAWSON, our CFO, and he's going to go over some numbers with us during the course of the meeting. And John WALDRON, our president and CEO, is here to my left. Secretary informs me that the records of the corporation show that there were 2,161,436 shares of common stock outstanding on the record date and entitled to vote. The notice of annual meeting and proxy statement and form of proxy for use at this meeting were mailed on approximately June 9th, 2020 to each shareholder of record as of the close of business May 27th, 2020. ERIK LAWSON and Lois Howard have agreed to serve as inspectors to count the votes and examine all the voting materials for this meeting. They, the inspectors, have informed me that the necessary quorum of the 2,161,436 shares of common stock are present in person or by proxy. Therefore, a vote will be taken on the business before this meeting. The item of business to be acted upon this meeting, stated in the proxy statement, is to vote upon the election of 9 directors of the corporation to serve for 1-year terms. So at this time, I will entertain a motion to approve the following resolution. Resolved that Johnny Barrett, Craig S. Connor, Joseph P. Dunnigan, Judy R. Gabriel, John P. Lovinger, Stephen J. Madalena, Claude J. Rowley, John R. Waldron, and Stephen A. Wells be and hereby are elected to serve as directors of the CMB Community Bank Corp. for 1-year terms or until the election of their successors. Could I get a motion? Well, Steve and Claude, I think, or Jack. Good pick. Since the motion and a second on the proposal will now vote to adopt this proposal. Is there any shareholder present who wants to vote in person? If everyone has voted, I declare the polls closed. Tim Sullivan, I'd like you to read the certificate and report of election. Tim?
Thank you, Craig. Present at this meeting in person or by proxy are holders of 1,214,671 shares of common stock of the corporation, representing 56.2% of the total votes eligible to be cast, constituting a majority and more than a quorum of the outstanding shares entitled to vote. Signed proxies and ballots have been inspected, and the following is a record of the votes cast in consideration of the election of directors. Of the 1,214,671 shares that were voted, 1,210,257, which equals 99.6% of the quorum, voted to elect the directors as proposed. Accordingly, the proposal to elect directors as proposed was duly approved by the shareholders.
According to the inspection of votes, the proposal is passed. Congratulations to the board of directors. And now, I would like ERIK LAWSON, our CFO, to make a few comments on the financial performance of 2019, which honestly was very outstanding.
Well, you've stolen my thunder now, Craig, but I will go over a few items. We didn't put up anything related to the financials for 2019. I just wanted to quickly go over a few of those numbers. You've all received them either in your proxy or the ability to look online and get those. We have net income for 2019 at $9,168,000, which gave us a basic earnings per share of $4.37. And overall cash dividends declared of $2,612,000. All items that I just mentioned are records for the bank. and the holding company, the whole entire entity, continued solid performance over the years. We will look at that in a moment briefly. The other item I wanted to mention, and this is something that should be very important to our shareholders, is our equity. We have equity now of, as of 2019, of $63,717,000. If we look back to 2015, which is in your financials in the proxy, we have $42,302,000. So over these last 5 years, we have increased by over 50%. That's quality capital, and that's something that we use as we grow going forward. That allows us to grow at a solid and even pace by having this additional capital. So that's a big positive for me when I look at the financials. The one other item I'll mention is the growth in the assets. We have, as of 2019, $737,426,000 in assets. And when we look back to 2015, we see that we had just under $502 million. Continued growth, over $230,000 in growth over that 5-year time frame. So we're seeing that growth continuing to happen not only in our area, but also, or in Hillsdale, but also in Jackson and Lenawee County. So those are all positives. On to our highlights. What we have here is we wanted to show history going back a little further. We have a 9-year history here, and what we are showing in the top slide, or the top portion of the slide, net interest margin and efficiency ratio. We can see that these are always a daily fight for every bank, always looking to improve these particular areas. Net interest margin is obviously where we make our bread and butter, so we focus on that. And we see that there have been some highs, there have been some lows, and the performance overall really solid at last year at 4.30. This is the toughest thing for us to maintain because that 4.30 is above where our peer groups are. So when we look at 2020, 2021, we're going to see pressure right here on the net interest margin. So that's just something that we all know because of the environment we're in now and what we're seeing with COVID, that pressure in the market is putting it right on that net interest margin. Efficiency ratio, that's always basically the cost it takes us to earn some money. We see that we're at 65%, we've been as high as 70. Overall, the goal is to try to maintain a low 60s number, and at this point, we're doing even better as our first quarter numbers show with our efficiency ratio. So overall solid there. We look at our earnings and dividends per share. We see nice rises on both the earnings per share and the dividends per share as we get towards 2019, up to that $4.37 that I mentioned earlier, $1.22 per share. And then we see the dividend payout ratio. Now, although this is going down, what we're doing is we're having to build the capital to allow us to continue to grow. When we look at the dividends that we're paying out per share, we're going up in that. We're still paying out monies to the shareholders, but as part of that, we need to grow our capital as well so that we continue to fund our growth, and that's kind of the combination. So although we're seeing that a little bit lower, it's starting to steady out, and we're able to give back quite a bit of our earnings to our shareholders. On the next slide, book value and dividends per share. So book value, that shows us where our bank is valued at a sale. If we had to just sell everything right now, where is our book value? So the book value there is 30.11. Now right now, if we look at our shares over the last few weeks, we're seeing that the sales are right around that number. So for us, being that we're selling at book, shows that we have some built-in equity for this bank, for this company. And we can see that there is room for us to grow. When you're selling around your essential liquidation value, that is just getting rid of the assets. But when you look at the growth and the income and the earnings that we're seeing, that number of 30.11 is usually much lower than what we're actually trading at. So we're showing that we have room. Okay, that's what I'm trying to get across. We have the $1.22 per share, I mentioned that earlier. You can see we're having a pretty good rise in what we're paying out to our shareholders. We do increase our shareholders a little bit over the course of time with any payouts to executives or to the board, so we are increasing the number of shares outstanding, but we're still able to grow our earnings enough to increase our shares or the amount that we give out. Yield on earning assets. I wanted to put this in because now this slide is comparing us to our peers. We're getting this from Quick Rate, which is an analysis. It's a company that analyzes all banks in the industry, but this particular slide is showing our comparison to the community banks in Michigan. Okay, and this is something that's put together by Quick Rate, and it's part of their Quick Analytics program. And we can see that our yield or earning assets, at this point, we're listed at 484 in 2019. You can see 426 in 2015. But you can also see our peers. And our peers, 410 back in 2015, they continue to rise, and so do we. We're up at 484 in 2019. They're at 463. So what we're showing here is that we're able to continue to grow our assets and grow at a reasonable pace. We're not selling our earnings away just to grow. We're continuing to grow and get some return on that. As I said, there may be struggles going forward because of the market and because of COVID, but I expect that everyone will have those same issues. So the expectation is we try to keep above that peer number to the extent that we can. Then for return, this is ROATCE. So what that is the return on average tangible common equity. Essentially what we're doing is we're taking our equity and we're taking out the intangible assets, which for most every bank is goodwill, and for us it's goodwill. So we take out the goodwill and then we use our earnings as the numerator and we compare and we see where we are to our peers again. This goes back the full 5 years. We can see above our peers over all periods, and then in 2019 at 14.79% compared to just under 10% for our peers, showing that the performance that we're able to do, even with the environments changing over the course of these 5 years, it's changed quite a bit, we can still, at this point, outperform our peers in that area as well. And then we get to net interest margin. I've talked about this earlier. I showed you where we were over the last 9-10 years. This is where we are compared to our peer median again. We look at these numbers and we can see that there has been some fluctuation. 2018, a pretty good year. 2019, we've seen a little bit of decline there. We start to see the pressure that the environment was putting on all banks, so you're seeing a little bit lower. But that being said, we compare this to the overall industry and our peers, and we can see that 385 as their peak, and now 374 for 2019. Again, we're going to look at 2020, we'll probably see a drop from that 374 number. In fact, I virtually guarantee we'll see a drop from that 374 number for the peer banks. And obviously, that impact will go through our net interest margin as well. We do our best to keep that as high as possible. Cost of funds, we get to the end here, and the reason I show cost of funds is because we don't always just earn our money on the asset side. We have to pay for funding, okay? And the way we pay for funding is we bring in deposits and we try to bring them in at a reasonable number. So in this case, it's good to be below our peers. All those other ones where we were looking at it, we wanted to see these blue bars well above the green. In this case, we want to see the green well above the blue bars, because the green is showing the cost of funds for our peers, and this is showing the actual cost of funds for the bank. Back in the heyday, 15, 16, 17, we didn't have to pay a whole heck of a lot for our deposits. Relative to our peers, we definitely didn't. We were paying roughly half. As we get into 18, everybody starts to have to pay a little bit more as the environment shifted dramatically in 18. That being said, we still retained a little bit less than half of our peers. We get up to 19, we were bringing in quite a bit more deposits. We had worked outside of our normal deposit base, not necessarily in region, but in type of depositors. We were getting a lot more of the larger entities. Those larger entities, especially when you come to municipalities, school districts, etc., you have a big focus on earnings, getting that money in there. Okay, so we were getting a little bit of pressure in 2019. We see that jumped up to that 58 basis points compared to our peers at 92. What we are seeing now so far in 2020, if I go forward just a little bit, we are actually dropping our rates, and I would expect that our peers will drop as well. We haven't seen anything yet because we don't have a comparison for the whole year, but we will see that this cost will start to come down because of the fact that the assets that we are getting paid on are also coming down. So overall, we expect that after the first quarter of 2020, this dropped, and we're looking to continue to keep that because deposits are coming in relatively plentiful for everybody right now. That's the environment. People aren't in the market, or people are getting the PPP funds and they're holding on to it. So overall, that's the analysis or the view of our peers and ourselves over the course of the last 5 or 9 years. Any questions on that or anything that I've gone over? I have that effect on people a lot.
Thanks, Eric.
Sure.
Excellent work by Eric and all the people in accounting. And the numbers have been, they just keep getting better, which is exactly what we want. I wanted to have John make a few comments. You've all heard about the PPP, and we've had a tremendous success with this SBA program and helping out the customers and helping out the communities, but it's just been all hands on deck effort, but it is impacting our financials. And rather than you see it, when we send out our second quarter financial statement and wonder what happened, I think John can just give you a little bit of color on what that might look like.
Thanks, Greg. We stopped in 2019, and when we budgeted for 2020, things were going very well. We assumed 2020 would continue. We budgeted better income, asset growth, and we thought things would continue. Well, we know things have changed. We had a number of projected deals coming in for this year that did happen, and a number that did not come in due to the virus. First quarter results are public information. First quarter was very good, but the game has changed with the virus. For the majority of 2020, we have dealt with the virus. Staffing has changed, branches have changed, how we operate has changed. Safety has been priority number one. Once we address safety, we had a highly dedicated staff here performing at a superior level, and I truly mean that. The mortgage volume that we have had has been record, and you all see where interest rates are for mortgages, and industry-wide mortgage volume is very high. But then you layer on that the PPP lending, the SBA program. We were one of the top banks in the state of Michigan, top community banks. We will close, we're close to 1,000. They're still funding in the program. We'll get to 1,000. So we'll close more than 1,000 loans, and we'll be pushing $140 million in money on the streets of our communities. So we've helped that many business owners, and we've put that many dollars on the street. As Craig said, we have funded those loans, and most of those loans ended up in deposits in our bank. So you can imagine, it's not $140 million in balance sheet growth, it's nearly double. So you'll see our balance sheet increase substantially at the end of 6/30. You'll see it taper throughout the year, and then you hear about the forgiveness that will happen. And the SBA has not provided guidance yet on how the forgiveness is calculated and how we do it, so we can't do it yet. So the balance sheet, like I say, will be high for end of this quarter, probably end of next quarter, and then you'll see it taper off. Our staff has done wonderful. People literally worked nights and weekends, in some cases all nights, trying to get PPP loans approved and funded. 2020 will be a good year. 2021 will be a challenge, I believe. But overall, things are in good shape. Staff's doing wonderful, and everybody has chipped in. I do want to announce that at our last board meeting, we have approved, our board approved and announced an initiative to help those impacted by the virus. We will be donating 6 figures to our communities, and that's, we haven't written the checks yet, but we will be working on that. So that's a great thing that our board has done. That's all I have. I've been here 18 years now. I've been to many of these meetings, and I was always impressed how Norm ran the meeting and Craig ran the meeting. And I realized this is my first time here that Michelle really puts all this together. Michelle orchestrated a lot of this. She retired officially earlier this year. She's agreed to stay on, and I want to thank her for all she's done and making this meeting run very smoothly. So thank you. Turn back to you, Jack.
I just want to make one comment regarding succession planning. So, John's been here, what did you say, 18?
18 years.
I've been here 26 or so. So we've had succession issues that we've had to deal with so many times, I can't even count them. No, but we've had some major succession issues that we've had to go through, including my position to John, and now we'll have Michelle, and we've had mortgage people leave. We have our auditors leaving very soon, but we have a succession plan in place there. And it just is amazing to me what a good job this bank does when it comes to succession planning. And it's nothing I've done or John's done, it's just a team effort. But we always seem to come out on the other end of it in better shape than we went into it. Because we hire good people, we train them, and we let them go. And it's nothing to worry about. And a lot of organizations don't have that luxury, but we sure do a good job of it. So appreciate all the effort that we can do and have done for the support of the new people coming in to take on more responsibility. I can open it up to any questions from the floor. Okay, if there aren't any questions, we could have a motion to adjourn the meeting.
I'll move.
Jack and maybe John or Judy. All those in favor say aye.
Aye.
Opposed, no. Motion carried, and the meeting is adjourned. Thank you very much.